Hello everybody, this video is entitled Good Stocks Cheap, OSCR, HIMS and Pagaya. And yes, HIMS is still in there. Actually, my confidence in HIMS is kind of growing today based on some information we're getting from the lawsuits. I want to talk about Pagaya. I haven't talked about Pagaya in years. I think Pagaya may be looking interesting for the first time. And I want to talk about OSCR. OSCR, a business that I like despite an industry that I really dislike. But the business of OSCR looks very interesting to me right now. Of course, Pagaya and OSCR both just reported their earnings the day before yesterday and then yesterday. So, well, I guess it was yesterday and this morning. Anyways, we both reported their earnings, so we're going to talk about those. I updated valuation. HIMS, we yet have to see the earnings. I will update the valuation for HIMS as soon as the earnings are out. Anyways, let's talk about OSCR. So, I don't understand why OSCR was not up way more than this. It should have been up way more than this. I listened to the entire call. OSCR as a management team that is on top of it. They are a leader in their field. Yes, a lot of people will downgrade their insurance to plans with lower premiums. Yes, they lost money last year because a lot of people knew they were going to lose coverage. So all of those people who knew they were going to lose coverage just went ahead with a bunch of medical treatment before losing coverage. But also, yes, the average premium for them is going to increase by something like 29%. That's a lot going for them. Yes, they have a bunch of cash on the balance sheet. In fact, I did not update the cash in my spreadsheet here because I really can't, because I don't know what to do with that cash number, because if I update it, I get an enterprise value that becomes negative, which is technically not really possible. So I need to study a little more the cash. Again, this is not an industry I'm too familiar with, but I'm familiar with growth. And I can tell you one thing about the growth that I love about this company is that they literally guided 61% year-over-year growth. I calculated that their EBITDA margin should be at the very least 2% at this point. Going forward, it should be about 2% now. So despite all of this, a very low EBITDA margin, a low gross margin, we have very high growth, and we have obviously a pitiful price to sales. Pitiful is not even the word to say. This company is trading at 0.06 times forward revenue. The enterprise value of the company is 1.22 billion, and the forward revenue is, between 18 and 19 billion is what they're guiding. So it makes absolutely no sense. Plus, you have the wild card of 2027. What if subsidies are voted in 2027? It seems like it's not going to happen. I don't know. But they don't need them. CEO talking about on the call, for example, how for some families healthcare is so essential, more essential than their mortgages. People talking about people making sacrifice to pay the healthcare premium. Also, one final thing about this OSCR health insurance is they were mentioning CMS program integrity initiatives. So I looked up a little bit. There's a lot of stocks on which I complain because CMS is life or death for their drugs, life or death for their business. Well, CMS is actually an ally of an insurance company, because if CMS stops covering something, like you may remember QuantaFlo, when CMS stopped covering QuantaFlo, well, of course, that was a major loss for QuantaFlo, right? The business was going to go out of business, but it was an enormous gain for insurance companies. So whenever you read a Center for Medicare Services program integrity initiatives, think about it as, coverage is going to be reduced for XYZ things, and there's a bunch of things they want to cover less and less and less. And of course, most of the insurance industry follows the CMS program initiatives and follow whatever CMS does. So this is actually a tailwind for a company like OSCR. The tone was really good on the tone. I think this stock, of course, is so undervalued enough to make me entirely overcome the industry. Also, they mentioned their average member is about a year younger. 37-year-old is the average member on OSCR, and they have a lot of healthy members on there. Anyways, enterprise value, over gross profit, over revenue growth is a 0.011. That's so cheap. That's 5 times cheaper than HIMS. Rule of 40 is a 63. And of course, why is that? That's because of that growth. This is a company which, if you just do nothing, is increasing their premiums by 30% next year without doing anything, because they don't have a choice. Because that's how it works. That's healthcare costs are going up and there's no more help, no more subsidies. So moving on to Pagaya. Covered Pagaya years back, didn't like it years back, or I think it was in the too hard pile, assuming I have such a pile. Anyways, now I'm looking at Pagaya. So the only downside that I have for Pagaya, of course, is the revenue growth. The revenue growth is only 15%. That revenue growth is, not good enough for me. Now, the revenue growth, why is it only 15%? Because the company is all about prudent allocation, prudence. They're talking about how they could take on more risk and grow faster. And that's, of course, true of all financing companies. If financing companies want to increase their risk, they can grow much faster if they want to do that. But Pagaya is not interested in increasing its risk, so it is deciding to grow at a slower pace. This is also something that SoFi back in the day used to experience. A lot of companies who do loans, who give personal loans, like in the case of Pagaya, or car loans in the case of Pagaya as well, a lot of companies who provide loans, they kind of decide their revenue growth. They decide revenue growth, right? I mean, it's like, because it's assumed that the market wants to borrow money. Everybody wants to borrow money in the market. The question is how much risk they want to take. And I think a lot of the investment thesis in Pagaya has to do with how confident you are in their loan portfolio. They have a loan portfolio. They own their loans. They carry their own loans on their book. How confident are you that these loans are an investment? Pagaya is yet a company where the debt and cash situation gets a little complicated to analyze, and this is why I'm holding off. And in fact, I need to look at how to really count the cash, because a lot of that cash actually is investment in their own loans. And so the question is, what do I think about the investment in their own loan? Do I think it's going to be impaired? Impaired by how much? So it's a company that I think trades a lot on the fears of credit risk, but nonetheless, it is a highly profitable company. EBITDA margin is 29%. EBITDA margin is on the increase for Pagaya. And most notably, Pagaya is a company that, from what I understand, has very little to no marketing expense, because they are embedded in the tools. They're embedded in the tools that lead people to borrow money. So I like Pagaya a little bit. I don't like it as much as OSCR. I don't like it as much as HIMS. It's still expensive. But for its sector, this company is starting to look cheap. And if you know more about Pagaya, please let me know about it in the comments section. Pagaya, of course, being a popular stock on X and on Twitter, may deserve a full analysis if I had such a thing as time. Anyways, the last stock, HIMS. HIMS is continuing its journey towards nonsensical move. In fact, all of the intraday gains of yesterday, we essentially lost them again. All of the intraday gains of yesterday, we lost again. It seems like we are dropping because there is tons of analyst downgrades. But analysts are downgrading their target prices, and so if you're dropping the target price from like 42 to like 30, or things like this. So plenty of analysts still have a price target much higher than 17. In my view, at $17, the market is pricing absolutely no growth for GLP-1. It's pricing the end of GLP-1s. But if you follow HIMS House, which has kind of become the reference when it comes to HIMS, HIMS is now a very popular stock. And I'm going to look at this interview. It will be very interesting to look at this interview. This patent attorney is saying this will take years to get a trial if there's no settlement. This will take years. Take years to get to trial. This is exactly what I've said in many of my videos, and they requested a jury trial. So this is going to take years to get to trial. And then think about HIMS. HIMS is likely going to appeal. There's going to be an appeals process. So this is a matter of years, and right now there's no preliminary injunction, meaning HIMS seems to be able to continue to sell GLP-1. So the market is pricing HIMS as if GLP-1 sales are going to stop right away. Well, in fact, it's not. I think this is going to take a very long time to play out. I think the market is being overly emotional. And I also think, and again, kudos to HIMS House for reporting this, I also think a lot of a drop in the HIMS stock price has to do with how many people are short. We're now at an all-time high short number. But if I put HIMS as my spreadsheet, and I know 47% is probably a little too high, I'm waiting for the call to update it. I'm waiting for a call to update it and likely lower it. This will be lowered. But by the way, even if I were to take the longer-term growth rate with using their long-term guidance, their $6.5 billion guidance that they got towards the end of the 2020s, if I were to use that number, I would still be at like a 22 or a 23%. So the stock would be a 0.1. So the stock would still be cheap. Put a 20 handle on revenue growth, the stock is still cheap. But 0.05, using the same revenue growth number I used in the past, this is the cheapest now. This is the cheapest that I've ever seen HIMS now. 0.06 was close to the cheapest. Now 0.05 is the cheapest that I've ever seen it. You can go back in all of my videos, in all of my years of covering HIMS. It is the cheapest on the growth-adjusted basis. Do not forget that the revenue of HIMS is so much greater now than when I started covering this stock in 2023. The revenue is so much greater now. So much higher. So to me, there's a great anomaly in this stock price. Traders own the stock, as someone on my Patreon once told me a few days ago. Let the shorts have their day in the sun. Let the shorts make their money a little bit, and then it will be the bulls' time to win again. And this stock, I have not lost my conviction in it. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.